Robschild, no investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Friday, June 6, 2025. I'm recording this at 2 p.m. Eastern Standard Time, a little earlier than normal. Our episode begins with our headline, 3 Reasons Why People Remove the L from BLS. Manipulation hits overdrive. Mainstream headlines like this one from CNBC mention how payrolls increased 139,000 more than the expected 125,000 for the non-farms payrolls report. So Mr. Market stays greedy, and the S&P 500 is up as of the recording of this episode. Reason number 1 why people remove the L from the BLS. Here is the report itself. The first little factor here. In May, the employment population ratio declined by 0.3 percentage points to 59.7%. The labor force participation rate decreased by 0.2 percentage point to 62.4%. So while the unemployment report official number is 4.2%, less people are participating because some people have given up. And when you give up looking for a job, you're no longer part of that unemployment number. Reason number 2 and 3 can be seen here on today's report. The change in total non-farm payroll employment for March was revised down by 65,000 from 185,000 to 120,000, and the change for April was revised down by 30,000 from 177,000 to 147,000. With these revisions, employment in March and April combined is 95,000 lower than previously reported. Just to remind you, today's payroll report supposedly for May, before any revisions, rose 139, 14,000, only 14,000 above the expected number. The news is saying that as a good report, while the actual report just took away 95,000 previously reported jobs that were not filled. So that's reason number 2. That is a huge revision. And, it makes, and we haven't even gotten the revision for this month yet. After 2 months of revisions downward, I would bet money at this point that this report will also be revised down, but that's just me and my crystal ball. The third reason we take away the L sometimes from the BLS report is this last sentence right here. Monthly revisions result from additional reports received from the business and government agencies since the last published estimates and from the recalculation of seasonal factors. And this is the part I want to focus on right here, recalculation of seasonal factors. Now, while most people dig a little bit deeper and take a look at the Fred chart of total non-farm payrolls, it is important to understand that this number is adjusted. It's changed. It's seasonally adjusted. The chart ticker symbol is PAYEMS for the seasonally adjusted. And believe it or not, they also publish one that is not seasonally adjusted, the PAYNSA, not as well known. And while the seasonally adjusted one looks like we're just going up and up and up comfortably, we can see from this chart the unadjusted seasonality one. I want to note between November, December, and May specifically, basically the same number. In December of 2024, we had 159,923, and in May, this report that we just got today, only a fraction higher at 159,964. The reason I bring this up is because outside of recessions, you pretty much never see the May report only fractionally higher than the previous November, December. Even when you simply go back to November of 2023 at 157,950, you can see that the May report was at 158,256. Relatively speaking, much higher. And when you look just year after year after year, it's always the same. From the peak in December of not seasonally adjusted total non-farm payrolls, we can see by the time we get to May, we are significantly higher than December whenever we are in good times. And this pattern repeats pretty much throughout all history. Back into the 80s, just a random sampling that I just grabbed here. We have a peak in December of 1984. By the time we're in May, significantly higher at 97. 726. Another peak in December 1985. By the time we get to May, higher at 99, 667. Very consistently, significantly higher. Not basically flat. From December 1987 to May, significantly higher at 105, 347. In fact, I challenge my viewers to try to find many times where May was not more significantly higher than the previous high in December and November. And so the BLS strikes again, recalculating seasonal factors. How convenient. To review those 3 points again, the employment population ratio went down, although the payrolls seasonally adjusted went from the expected 125,000 up 14,000. We actually lost 95,000 in revisions of the past 2 months, and we have the recalculation of seasonal factors affecting how we see this data. Next up, community topics. What moves, if any, did you make today? Robschild's UVXY puts obviously expiring worthless today, and his URA puts expiring worthless, so bought some more. Expire next week. On the URA puts, same strike price. Actually, I think I already had these, but I still have puts on URA. And then I actually bought Microsoft puts at 465 that expire next Friday. We're at a double top here. The contract seemed unusually inexpensive, so nibbled on that a little bit too today. Coming up next week, Wednesday, Thursday, CPI, PPI report. Those are inflation reports, continuous tariff updates as always, and federal budget updates. Thank you so much for watching, subscribing. You just put your mouse over the little dark square over here and click subscribe, commenting, and supporting. No changes in the daily reminders macro view. See my website to read them in the description. Also, crystal ball ratings and Robschild portfolio. Not really any changes. Well, in the options, I got that Microsoft put in addition to URA puts. One of the reasons I am still comfortable getting URA puts is because we are at all-time highs. It's a double top situation, and uranium price is actually going down here. That mismatch won't last long in my estimation. Anyhow, onto the charts. SPX, starting with the S&P 500. Right now we're up about 1%. Not moving much, but more bullish than bearish, obviously off of the BLS data coming out today is what I see going on. And with the supposed strong jobs, yields were able to rise, negating this head and shoulders top that I've been talking about. So we can delete that and look for further patterns. TLT, my favorite place to be, also dropping today. Finding some support on this yellow line that I drew here from the very bottom on May 22nd connecting to June 3rd. We're basically at that support level. And for this head and shoulders right here that I had previously drawn, we're going to adjust it a little bit and call the new neckline to be about here. So now it's basically flat. I still think that we have the potential for this to play out as head and shoulders, but it's certainly weaker than it had looked yesterday. I think that when Mr. Market realizes that, the jobs is not as strong as the BLS is reporting, it will probably drive yields down. We are definitely at this part of the cycle. Next Thursday, the initial claims, I look in my crystal ball and I feel like I've never seen clearer initial claims skyrocketing next week, but we'll see. Remember, I'm just a guy with a crystal ball. Moving on to the next chart, I just want to note HYG divided by SHI is actually up today. This indicates that credit spreads are tightening. People are willing to buy junk bonds at even less of a discount to treasuries. This is screaming complacency in my book. This is what I'm seeing. I noted last night how Bitcoin was really looking very weak today. We have the same exact candle so far from bottom to top. This is pretty interesting. I have no idea what Bitcoin is going to do from here. However, I think he, along with Mr. Market, is likely to eventually wake up to the reality of the job situation. Again, just me and my crystal ball. Dr. Copper is not buying the BLS. I mentioned yesterday also this ginormous topping tail being an extremely bearish signal, and it's confirmed today with a pretty good move down 1.5%. Dr. Copper doesn't believe the BLS. He has a PhD in economics, and he doesn't believe any of it. He's going down today. Oh, another thing that caught my eye today, palladium, a rare earth metal, shooting up 5% today. Not super correlated to lots of other things. It's rarer than gold, and yet it's only 1/3 of the price of gold, so it's an interesting metal to be keeping track of. And then we have the Russell 2000 I wanted to bring up today. Did break above, finally. I've been talking about this 209.55 level as being major resistance, and how the Russell 2000 has been unable to get above it. We did break above it today. Not with a large grain candle, at least so far as the recording of this show, but more of a doji than anything. I sense that this could easily reverse back down to the downside as early as on Monday, but we'll see about that. Last chart of the day, 10-year break-even inflation rate. We'll get another update at 5 o'clock today. It's only 2:20 p.m. right now as I'm recording here. I find it notable that we are now short term finding very clearly and steadily lower lows, lower highs, lower lows, lower highs, lower lows, just from the middle of May. And the larger structure here we have from February, a lower low, in March 2025, a lower high of the end of March 2025, a lower low, and then another lower high, looking like we may be headed back down to another lower low, but I don't know. I'm just a guy with a crystal ball, and that's all from me and my crystal ball. I hope you enjoyed. Thank you for watching, and see you next time. Robschild.